Uh.
All right, let's go ahead and get into it. So we had the weekly outlook yesterday that I was showing you guys basically what we got transpiring today. We come off that new highs. So we're just trying to see how prices are going to settle out today. So no need to be aggressive or want to force things to happen. So let's go over kind of what we looked at. So just looking at a daily here. We got that daily consolidation that we broke out of and came back up into. And I'm going to keep this on daily for right now. Just so as we drop down, there's no confusion. So then we have this range where prices is going back and forth. And then this is consolidation too as well, but just looking at this range on a lower time frame, and seeing how this range is playing out with everything else and correlation to everything else, and just trying to put a story together. And that's the biggest thing too, is just putting that story together. So just right now with today's price action so far, I'm really hands off until it shows me something that is obvious. Are you want to see things that are obvious? Yeah, but you got to be comfortable with it too. Just because you see something that looks good, is it worth taking? And you guys know with me, it's about the risk. Is the risk worth it? So looking at this daily now, it broke out of it, came back up into it. Now let's go down to this 4 hour. So we had that hourly, put that back on hour. Okay, so that midpoint we had here on the daily, we're bouncing off of. So we're knowing that this move from the bottom up is coming off of a key level. And as we're pushing up, we can look at this price action inside of this candle, which is our candle. But that also shows us too that we're focused on current price action more than something that happened later on. Something that happened later on would have been this midpoint. Let me drag it over so you guys can see. So now you can't even see the screen. Let me zoom out. Okay, so when you have this midpoint here and prices bouncing off of that midpoint, well, this is previous day's data, but we bounced off of this level and now we're pushing up. So that means that we're focused on current price. Now we were looking for price to come down to that level, then we'd be focused on past price until it gets down there, and then once it does this, now we're focused on current. And you balance between the both. So now having that, we see that we have this gap here. Price is already filling that gap right now, pushing to the upside off of that same midpoint. So from there, let's drop down to the 1 hour, because your focus is what is price doing at my time, not what it's going to do for the whole day. Now, if you want to look for the whole day, by any means, but for the most part, you want to see what is going to transpire throughout your session or your trading time. If you're only trading for an hour, then your hour. If you're trading for 2 hours, your 2 hours. If you're trading for AM session, AM session. Just focus on where you're looking at it at. Don't focus on the whole day, because then you can get lost trying to jump ahead or get ahead of the market, and you don't need to. So now I'm just focused on what price is doing right now. Everything else will be after the fact, and I'll come back and look and see what happened after that. But your sole job is to get on here, get what you can get, and get up out of there. That's the main thing. Keep the main thing the main thing. All right, so you see you had this right here. You had this inversion and confirmation right here. And then we'll look at that at 60-point risk. But sometimes too, if you have a good model and it's bouncing off of something that's a key level, and you see the inversion confirmation and you see how many points you have to risk, just think about it. That's probably setting up for a big move. Sometimes when you have big risk on your confirmations, that could be leading to a big move. So sometimes for me, that could be an indicator of a big move, because even 2 standard deviations of this right here will be 120 points. It's just you have to risk so much. So like right now, what is it at? Almost a 1-to-1 from this risk here. Yeah, almost 1-to-1. So I'm gonna let this play out, let the market open. We're gonna let it open, give it 5 minutes, and then let it play out from there. So I'm not jumping anything. I just want to see how market plays out. So we got hour 15 here, and we'll go 5 here just to watch it. You're going to see a bunch of things you could take on the 5-minute or opportunities, but right now I'm not seeking an opportunity. I just want to get in sync. Even though I feel like I'm already in sync, I want to get more in sync. So let's just watch this price action. The market opens up in 5 minutes. So let me fix this light real fast. Are we doing that? While we wait for it to open anyway. Right back. Okay. And there's that push up. Okay. Put my volume up. Like I say, not jumping the gun on anything yet. Okay, so look at the hour. Me focus on one screen for right now. So look at this level right here. See how you have, turn this off. See how we have this high right here taken out. Your eyes should go straight to it. That one. Then you have this right here. This is hourly, so I want to see how I'm setting it up as a sell model. But the reason why I'm setting it up like this is because even though I'm not looking at it to trade off of the hourly, I'm looking at it to see how it's going to react. So think about how a sell model or a buy model you trade off of. So that reaction you want to see off the confirmation, you want to see the same thing, and that helps you with your direction of buys. So right now I'm just trying to see if it's in sync with this. Because we have this higher taken out, but we also have this low already taken out. So you have this here, this inversion, and then this confirmation here. So this confirmation would have been here. And then you have inversion here. So see how you're between two ranges? Here and there. So price is just inside of here. Getting in sync. Let's watch 15 minutes. Go. So you want to label everything. That rejection. Let's look at it on the hour. So the hour there. So watching this price action on the hour. Back 5 minutes. From this initial risk that was long with this wick right here is 56 points. Just that candle by itself. So all that price action that we have right now, this volume from here to where it's at now, is 130 points. So is it a lot? Yeah. But for the opening, not really. It pushed up good though. So now, sorry, 15. now what we're looking at is the correlation between the 1 hour, the 5, and the 15. So you got this huge rejection on the 1 hour. That 15 minutes pulling back, and so is the 5 minute. 5 minute is heading to a floor, while the 15 minute is trying to create one. So right now, all we're doing is just staying in sync. We're pretty much in sync for the most part because of our higher time frame markup, and that's why I put it on there. Like, you want it on there and know where you're at. Put this in a folder too, to know where you're at. So look, come off this hourly consolidation, and then we come into this midpoint of this range, and then inside of this midpoint, what's inside of that midpoint right here, and then premium, that confirmation. And then look where price is having trouble at, right at the midpoint. But this candle's not closed yet, so it can do whatever it wants. And two, when it comes to like lower time frame, looking at this from this perspective right here is, yeah, I can start looking at the 5 minute for opportunities, but you want the 15 minute to guide you into that. If the 15 minutes not telling me look for opportunities, and the 1 hour is trying to give me a directional bias, I'll just wait for everything to get in sync. There's no reason to rush it, and it's Monday. Like, I'm gonna tell you guys time and time again, it's so important to wait for price action to really show you what it wants to do. There's no need to rush into it. Stuff is not going nowhere. Let's see. Like, I have a separate screen that I can see 15, 3, 5, and 1. Then I have this screen that you guys see where you can see the 1 hour, 15, and 5. So just looking at all those in correlation. Now the funny thing is we have this expansion to the upside. We see that 5 minute close. Look at that super long wick, and then if we take that wick, look at the midpoint of that wick. I'm gonna see what the price is, because you want to keep that in the back of your mind. So look at that, 22,961 even. And look at that. Look at the high of that wick. So I'm not marking up the midpoint of the wick because I'm like, oh, it's gonna bounce off of there and do what it needs to do. I can care less what it does. I just want to see, like, oh, okay, I'm at sync with price. It bounced off of a key level, which for me that's a key level because it's at an area in which, to me, it's sensitive price action. So everything matters. But I want to see this same thing correlate on the 15 minute, because the 15 minute is where I get most of my information from, and then the 5 minute I'm just adding to that whenever I have the 15 minute confluence. And right, like even right now, for me, any more markups than this starts to become too messy. Like, I'll even have it to where I'll do this. Let's see. Like I did last time. I think you guys seen when I did it. Take like the hourly and leave it on the hour. That way my chart's clean. Especially on the 5 minute, because you're marking up the 5 minute. So visibility. Just so I have a clean chart. And I can take that same folder, hourly. We can do it for the 15 minutes too. Because when I'm doing my markups and I'm focused on my trade, I want to focus on current price action, which is that 5 minute. So I don't want nothing throwing me off and making me think something that's not there, or trying to be too anxious to take something when waiting for the right opportunities. It's the better play. So do this. What was I doing? Okay. Here. Yeah. Remember, we're in this range. So we're going out of a premium back into a discount, but look at the pullback. What is price trying to tell you? That's the key. What is it trying to let us know? That's what you want to find out. So now seeing this with this rejection, I'm like, price may just fall into 22,873 on that 1 hour confirmation, taking out that low, fall inside of that, and then fall inside of one of these floors, these bissies, and then probably continue to the upside. But remember, we also took out all-time highs, so this can very much just drop to the downside. And you can't be like, oh, I missed it. I missed that trade, because if that's what you're thinking, then this is coming out of a premium, right? But it's momentum out of a premium. So whenever you're trying to see a trade, or you see a trade, a possible trade, and you're like, well, I can't take it because it's not in a premium anymore. Well, if the momentum is coming out of a premium, then that price leg is technically still from premium. That's where it started from. Now, if it retraces back up and gives you an opportunity inside of that price leg that's coming out of the premium, okay. But you have to be okay with the risk. That's the main thing. Just be okay with the risk. And then we see this huge push down off of that midpoint of that wick. None of this stuff is like out of the blue. Everything is done with a purpose. Like, look, we can even see this 5 minute right here. There. And then you have this confirmation here on the 5 minute. That's 25 points. It doesn't want to go all the way back up to the high. And then you have a second opportunity right here. Second confirmation. I don't want to have 2 and 3 confirmations. All right. The most I have is 2. And then after that, I'm pretty much like, I don't have them no more. When it comes to confirmation, I just have 2. So with these, price can very much blow through these, because think about it. This is 5 minute. This is not 1 hour. This is not 15 minutes. This is not 4 hours. This is 5 minute. So if price wants to, and we have the momentum, and it just blows straight through. But look where we're at now. So from there to there, that's 55 points. That's a lot of points. But all that momentum going to the downside. But remember, what we're dropping off of, we're coming off of those key highs. So you see how market always opens with that manipulation, making people think it's going to go one way and it doesn't. You want price to settle out. Let it settle out, and then from there, seek opportunities. But don't take nothing that seems you're unsure about. It's no purpose. Could it potentially give you what you're looking for? Yeah, but in the end, it's like, is it worth it? That's the question you want to ask yourself. Is that trade worth it? If you feel like it's worth it, by any means. But if it's not, just wait. It's only Monday. And something so simple as it's only Monday can take you a long way. For this push up, that initial stop loss is right here. Look how close it came to it. So from here to that initial stop loss is, call it 15 points. 30 points is here. That's already 1 and 2. There. And just to show you, there is a 1 minute plan out right now. Put this here. Conversion. Confirmation there. That's a 1 minute plan out. That risk is 26 points. That's a lot. Targeting this out here at the midpoint with that wick. So possibilities. Is the risk worth it? That's what you want to ask yourself. And then look at the hourly. You got 10 minutes left to the hour closes. Look how the hour is playing out. And that CB that we had, the 5 minute, is not closed. And then look at that immediate rejection on the 15 minute. Right back up into that 1 hour inversion. Look at that railroad right back down and right back up. Doesn't it look familiar? We had it last week. All you want to see now is how price is going to play inside of that range. below, so where we're at right now, just in this back and forth, 22,910.75. That's going to be your midpoint of this range. So if price wants to come back anywhere inside of a discount side of that, and then continue to push up to go for that high at 22,961. Every time you look for opportunity, you just simply want to ask yourself, is the risk worth it? Look at this price action. Is it something, just based off of what you see right now, is it something you want to be a part of? And you base that off of the back and forthness, the railroads, which is one candle up directly down and one candle directly up, right next to each other. And then look at the hourly, how it's trying to find balance, because look at how it's printed. You have both wicks on both sides, and you have this volume that's just in the middle. So, kind of, what is that showing you? It's kind of showing you like an indecision, right? Price doesn't know what it wants to do, but go up or go down. But look where we're at right now inside of that bigger range. We're in a discount. So, from here, you expect the price to go up to a certain point, and then from there, is it going to fade out and then continue back to the downside? Or we're coming off of this hourly consolidation as well. We bounce off of it, broke it, bounce off of it again, continuing up, taking up that high, now pressing down, sweeping off this low, and then we swap out that low, and now price is trying to do what? Potentially, maybe trying to go to the high, and then continue to the upside. And then from there, what could it do? It can take out that high and then drop right back to the downside. All you're trying to do is just get in sync with price. That way you don't have to deal with, oh, is it going all the way up here or all the way down there? You're just looking for your opportunity at your time. That's why finding your time is important. If you're coming to the market at any given time and you don't have a set time for yourself, then you're throwing yourself off because you're not consistent with time. And even if you have a consistent strategy, at some point in time, not being consistent in time will throw you off, making you think the strategy is not working. But if you have the idea that, okay, as long as I keep showing up and keep doing the same system, that it eventually play out, then the odds be in my favor, because I'm sitting there and I'm doing the data or the groundwork to get to that point. Then it'll build up to that. Five minutes left to that 1 hour candle close. I want to see how that 1 hour candle is going to close and respond to that 1 hour consolidation. And we have a gap fill already. where price just hasn't went for the high and took out the low. Not yet. Price can even just go to this high it created. The next candle can be below this one. That creates a swing point, and price can go up just to that wick, take out this high, and then continue to the downside without even taking out this one. So there's different variables that can happen as just being on the right side of your opportunity. Okay, so dip back down. That candle is nasty, man. It's a nasty candle. Like stuff like that. And it's like a lot of risk involved when it comes to possibilities. Now, that's not saying that there's not opportunities there. It's just the risk that's involved. Is like it's a lot to be dealing with back and forth. Either that, or you have to drop your contract size. So let's say something is 26 points, and I'm not willing to risk. I'm not willing to risk that much. Then I have to drop my contract size down to micros, and I'm not looking to do that. Not for a quick opportunity. You don't want to force it. If you're dropping your contract size down just to take it, okay, cool. But if you're doing that because you feel like you're missing out, no. Is it your trade? If it's your trade, by any means. But if it's not, don't do that. If it's your trade, like, okay, I like this trade, it's just too much risk. Okay, cool. But if you're just doing it just to take it, no way. There's no need to. Because you're going to realize the more and more you do it, it's just the same thing every single day. Either you're waiting for a short time or a long time. That's it. Price is going up or price is going down. Is it going for imbalance or is it going for liquidity? We're looking for a buy model, we're looking for a sell model. If this, then that. Real slow price. It's 28 points. Yeah. This is the beginning of the hour candle, so price can very much stall around. But we're getting that push to the upside. Price has a decent push to the downside in it. One more time. Targeting these lows right here. The reason why I say that, because you look at the 3 minute, and you look at this range from here to here. Don't take out these lows. And continue pushing to the upside if it wants to. Just because it's still in a discount now. But like I said, we could very much go back up to that confirmation. It can drop to the downside, but just knowing that price already took out these lows here, and this low is coming from this high. Just keeping it simple with market structure. Because some days are going to be cleaner than others. You got to be okay with that. So let's see if that plays out. So what's that price? That low is 902.50. So it's a little circle here. Same. Where is price gonna go straight to the upside without even coming back down? And then this here too, you see how you pushed up and then we came back down. Ask yourself, where did it come back down to? Well, you had this consolidation, expansion, consolidation, retracement, back to this this consolidation here. Well, this consolidation. So, because you want to look at the original consolidation. So what I mean by the original is like this was the most current push up, and then we have this consolidation here. So this will be my original consolidation on this time frame. So here, there. So shoot, price can very much come down, take out this low, come back into this consolidation here, and then push right back to the upside for 1 or 2. Right now, we're just setting traps, possible traps. Because once you know why it did it, like look how it broke through it, and it came right back above it. So it didn't respect it at all. And you had this area where a bunch of orders were being filled, taken off, closed. So this can be a magnet that price comes back down to, has a hard time, and then from there, because this will be still in a discount on that bigger time frame. So right now, it's just a mental thing. Shoot, honestly, let's see, 2879, 28. No, that's up here. Oh, it is. That 1 minute, look. That 1 minute inversion or model lines up with that 5 minute consolidation. So price can very much go take out that low, sweep the low, and then fall inside of here. Look inside of there and then push to the upside. And then that risk is 25 points. Then if it keeps pushing up, then so we just wait. Because it can get back to this consolidation right here. And then you can have price action inside of here, which shows consolidation. So right now it's just a waiting thing. Just wait for it to get to a key area. Right now it's at a key area. It's at a inversion, but I want it to be at a confirmation. So either we're going for a confirmation or we're going for liquidity. It's just the hardest part, man. It's wait. It really is. You got price dropping off of 22,920. That's that drop. Trace right back up. Almost hit the power button. That was not good. So, right up to that confirmation. Yeah, that railroad, man. This one here was a good one. 15. That'd be more than that though. So far, we have 95 points from that. The price action is cool this morning, but it's just not clean. But you're seeing how we basically followed this whole thing as it transpired. Like even when this push down was going down, it didn't look like weird. It was just we've seen that happening and why it was happening. And then from there we just followed it. So the whole time we're in sync with market. So right now you see how we're going back to that 5-minute consolidation and that 15-minute consolidation. 15-minute confirmation, my bad. 15-minute confirmation off of that 1 hour consolidation. And now we're going back to that 5-minute midpoint of that wick we bounced off of earlier. And we've seen it drop straight down, right back to it. So there's that. So now we're in that 15-minute, that's actually 1 hour confirmation. So 1 hour confirmation. Looking at the 15-minute, seeing that we have the midpoint of this 15-minute wick here, you could look at that just to see how price reacts off of that. I just want to see that price. What is it? 22,961. Same as here. So same wick, same push up. Let's see how price acts inside of this area. See how we bounced off that. So everything that we had mapped out and the way it mapped out, it played out. It just price is ugly. And the time it came down real hard and then it pushed up and then you had this consolidation in the middle of this frame. So, but even with price action like this, as you see, you could always get in sync. Always, always, always. And just to clarify, this confirmation and inversion is on the hour on both. It's not 15 minutes, 1 hour. So, but we're watching it on the 15 and the 1 hour. And then if you look at that 1 hour candle off of that 15-minute, this 1 hour candle off of this hourly consolidation here, we came back to what we bounced off of it, but look at the price action of the last hour. It was balanced pretty much. We had pretty much even wick on both sides, and we had the body just directly in the middle. So this volume here is just showing what price wanted to do with this one, just filling the rest of it. And then show you guys the 1 minute again real fast. So we had that. This range from here to here. We had this inversion here. And confirmation here. Price went to this one. But the thing is the risk. Like 25 points. You're getting 50 points for 1 or 2. But the thing is you're risking a lot. Now, if you're going smaller in size, okay, cool. But at the same time, too, with smaller size or smaller contracts, you're not getting bigger gains. So if you're somebody that's always expecting a bigger gain, just mentally, you're not going to be satisfied with those smaller contracts. That's how I am. If I'm doing, let's say I want to go down to 5 minis or micros. I'll go down to 5 micros and then I'm trading the micros, and then I'm like, the point's okay, but it's not the trade I'm looking for. It's not the trade. It's the point factor that you're dealing with. That's what you're having an issue with. It's not the trade. So for me, doing micros, it has to be worth it, because majority of the time, if I'm doing micros, I'm going to add to it as just pushing. So I'll do 5 micros in the beginning just to risk to get that 25 points out the way. And I feel like I'm comfortable enough to add to it. I'll add to it going down to a lower time frame, getting in sync with price action. Then add another 5 micros to it to make it 1 mini. And then from there, I probably stack on another mini. But that's all building, that's all compounding. But that's going to take you seeing the trade play out from beginning to end, but just being in sync with it. So that's why being in sync is just, for me, is just key. Because you can always find your way. So we're getting back to that initial stop loss here. 17 points away. This high now has been swept. So even though we're looking at 5-minute price action, we're focused on the higher time frame right now to see what it's trying to tell us, because now we know that we're inside of that premium, this range here. So we talking about that high from earlier, this high right here. This high is 23,021.50. This price gonna go sweep that high and then head to the downside. This price gonna make a high here, the next candle pulls down, and then it makes this high here, and then pull to the downside for it to target later. You wanna see how the price action is gonna play out. Make these letters white. So price action like this, you don't want to be forcing anything. And so it takes time at too, because now you're at this higher time frame imbalance or confirmation, but it's going to take you some time to get price action inside of that to see if this is the area you want to play off of. The body, how that body closed. All these things are confluences. Little things like that. We can actually leave it on there. At 15 minutes, look at the reaction. Push off, nice rejection. But see how we anticipated the rejection because we were at a key area. It's not because, oh, it's supposed to drop down from here because it took out a high. Yeah, that's one thing. It took out a high, but how many times have you seen a price go for a high and then continue going? and then look at the price action we just had last hour. So if you don't have momentum following that, because everything is flow. So if one candle is showing you one way, another, like just a bullish push up, the next candle should be a continuation of that candle until it phases out, and then we go into consolidation. But once it stops, or you getting like we had that 1 hour where just back and forth within the bodies in the middle, the very next hour that price action can be flip flop. So you're not blown away by something going a certain way and then pulling down back hard, or just doing something weird, because we just had weird price action last hour. So everything is a continuation of something else. So now we have that push up. Let's look at the 3 minute. So 3 minute, you have super tiny. So you have technically that would be your first inversion. Here. That'll be a confirmation. If this is what you're looking for, think about it. We done seen at least 2 or 3 examples of buys and sales. So I'm showing multiple opportunities. It just, what's your risk factor? What are you willing to risk? What are you okay with? And also remember, if you're looking for this opportunity, you have 2 hourly sell model and buy model. Prices between both, so price can do whatever it wants. But you see, if you're looking at it go above 941, this price is 961. So this will be still under a premium. This one would just barely beat. Yeah, let's say price doesn't want to go back up. Your price is looking to go to the upside. Remember I was talking about this low from earlier? This low can get taken out. That could be their price leg going down into this consolidation. And then looking for price to mosey right back on up. And it can go right back up to this bottom and then go back down. Or it can break through it. Like, there's so many different ways you can play it out, especially when you're having a market like this. So again, that's why I love being in sync. It helps with your patience a lot. How much is this first? Second. 23 points. Remember, you got this gap as well. So you had the second one, you had to include the gaps. It looked like this. And you got the stop loss right at the first one. So 23 points at least. Target at least as low. That risk ain't cool. So in that case, I would look for more this one. If it doesn't get there, it doesn't get there. Just because of the risk more than anything. Because it can very much just blow inside of this one, blow up into this one, and then go here, still go here. You could have just waited for it to come here and then had this. And then protected at the high, but instead you would have that. Which is the same amount of risk, but just imagine if you got into this and then it took you out and it still went inside of here, stopped somewhere inside of here, and then went to the downside. But you gotta be okay with missing it too. It's all a part of it. The main thing you got to factor in with all of this, even with the models, is that we're coming back off of that hourly consolidation. That right there is a key component. So it's like, even if this is the opportunity you're looking for, it may be short-lived. But you're not here for a long time. You're just here to get your piece of the pie and get up out of there, if willing. Slow price action. Slow. Nice points move though, but just choppy. Nonetheless, the opportunities. Just choppy. Yeah, I was talking about earlier. Again, you would have been in this one and didn't wait for this one, and it would have been caught up in all of this. It would have been getting toward the stop loss, and that would have been your entry. So wait for right opportunities, man. Now, that's not to say that it can sit inside of here. Don't even touch that and drop to the downside. That can definitely happen. Or has happened, let me say that before. Tap. So it looks something like this. And you can target the low. It's up to you guys though. Remember, we coming off of that 1 hour consolidation, so price can barely be much continuing up. On which one? Oh, you did the first one? Ah, okay. It's cool. Yes, sometimes that right there, that could get you a lot. And it'll frustrate you so much because you like, bro, I thought I had it. I thought I was this, and that. And then you get tripped up because those two confirmations, you don't want to miss out. Did you do minis or micros? I'm curious. Oh no, a mini? No. Okay. When you first starting off, fresh account, always do micros. Because you want a compound first. You don't want a nice size L, and then now you're trying to scratch, and claw to get back to break even with your account. So 5 micros, build with that, get a couple of trades under your belt, get a nice cushion, and then with that cushion, you use a piece of that cushion and you get your next trade, and then that'll like 2x your account from there, and then you can compound that. So something like that, just looking at it from that perspective, you want to be able to capitalize off of that, because you could have been catching the downside, but just that initial confirmation when you got two of them, sometimes you got to look at how the market is playing out and the perspective on how it's playing out, because it could be good to catch the second one that was made, because you could potentially miss the first one. But let's say you did that, right? Let's say you did 5 micros. Would you be confident to get on the second one? So micros is the way to go in the beginning, man. Just to build up. And then also you can add to micros. Let's say you did 5, like I said, you did 5 micros. You feel confident in the trade. You get into a second position inside of that trade, and then you find some imbalance that you can have another stop loss at for 5 micros. So you could be in for a total of 10, but you have a stop loss of 5 at some key level as price is already pushing up. So it can cut you off or take off half of whatever you risk initially. But yeah, that minis in the beginning, I would say, yeah, you can. There's nothing wrong with it, but you want to, especially it being fresh for you, just go on with micros and just build off of that. You could do the same damage. You really, really can. Like I'll go to micros if I have to. But for the most part, I do minis now. But micros, shoot, I do micros in a heartbeat. Instead of doing, like, let's say I'm doing 2 minis. Instead of doing 2 minis, I'll do 20 micros. That way I can manage it a lot better, because that's what a micro is about. It's smaller risk, but it's about management as well. Because there is at one time with Top Step, they didn't have mini to micro conversion, which means if you had 1 mini, they didn't convert that to 10 micros. They will convert 1 mini to 1 micro. It was stupid, but they ended up fixing it. Or did they? Oh, they probably fixed it for their app. I wonder if they fixed it for Trader Pay. But yeah, don't let that loss get to you, man. I would say walk away from it today. Last time I tried, okay, it wasn't fixed. Okay, so they probably fixed it for their dedicated platform, and they didn't fix it for Trader Pay. So I would say walk away with that. Yup. Mm-hmm. Yup. Yup. That's what it is. Nope, not Trader Pay. Because if you can't do it now, they didn't fix it. But I know they said they did fix it, so they must have fixed it on their platform. But yeah, don't let that loss get to you, man. It's just one. Just come in the next day, wait for a better opportunity. Like this one may not even play out. Now we got a nice little push to the downside. They tried, but they ain't tried hard enough. 17 points. Okay. That's not a bad loss. Yeah, 17-point draw, that's not a bad loss. Okay, that's good. Yeah, that's it. Just be more choosy. That's all. That's all you gotta do. That's it. That's all, man. Literally, like, that's all you gotta do, and then from there you'll see how fast you can uh, compound it right back up. Like, just taking it easy. Like, this market right now is ain't clean. Like, you see that about to get stopped out. But remember, I was talking about earlier that 1 hour consolidation. So this is like counter trend trading. And then it closed above it. Yep, it closed above it. So yeah, 100%. Counter trend trading is cool, but most times I'm sitting on my hands because you want to flow with the market. Even though your mind telling you, like, we trade reversals. Okay, so in your mind you think counter trend, like you're trying to catch the opposite. But you can catch the reversal inside of a continuation because all it is just liquidity that's been targeted short term, and then we're still continuing going the way it's going. So we're still flowing with the market. So a reversal is not the market completely turned the other way. It's just turning, let's say price is going up and it flipped over, but it's still going up. It just flipped back to continue going the same way it was just going. But we're just catching the flip back. People think reversal, they think automatically you're reversing the whole market. Like, no, you still can be in continuation with whatever the trend is doing. Price can run for all-time highs again. Yeah, man, that 1 hour consolidation told it all. Take this off. Hopefully this is a good example. Let's watch the watch that next 1 hour candle open, and then look at it. Look how bullish it was. Remember how I just looked not too long ago? Yeah, this whole move is off of this here. Off of this 1 hour confirmation and inversion. And then it blew through this one, headed towards the high. They're the best of all time. $23. 114. This high was 23,021.50. We sucked that liquidity, so when this price gonna give a pullback, or it's just gonna continue to the upside, or is that what it was looking for? It looks like it's gonna continue, just based off how price action is playing out right now, especially with this floor right here. It's giving signs of continuation. Price being price. Treats this floor real fast. Bounced out that floor. So price is in a continuation right now. That's it for right now, fellas. I'm gonna leave you with that, and we back at it tomorrow, taking it easy, not overdo anything. Wait for stuff to come to us, and we take the opportunity. So I'll see you guys tomorrow.